Welcome back to the Neuro Finance Masterclass.
Yeah, over the previous sessions of this 365 Days to Financial Freedom series, we've really covered an incredible amount of ground. But today, right here on day 75, we are bridging that crucial gap between simply knowing the concepts and actually, well, doing them.
Exactly. This explainer is all about taking that theoretical knowledge and turning it into a concrete, 5-step daily execution. We call it the Architect's Daily Checklist. So let's jump right into it. The core idea today is this: amateurs react to news, but professionals execute a plan. I want you to just picture the typical amateur's morning, right? You wake up, immediately grab your phone, crack open your apps, and instantly think, oh man, what's the price today? You are just instantly at the mercy of the market's noise.
Right, it's totally chaotic. Now contrast that with the highly structured, very deliberate routine of a professional, an architect. See, an architect doesn't really care about the daily noise or the panic on social media. The architect only cares about one thing, and that's executing the blueprint.
So here is your high-energy procedural breakdown for building your 10-minute daily routine today. First, we'll talk about moving from theory to execution. Second, checking the macro weather using the DXY and the VIX. Third, consulting the compass with our moving averages. Fourth, getting into tactical micro stuff with the trenches and the thermometer. And finally, putting it all together in the architect's daily discipline. All right, Section 1, Theory to Execution. Moving straight into Section 2, Macro Weather, assessing the DXY and VIX. Okay, so before you even think about buying or selling anything, you absolutely have to know exactly what kind of environment you're operating in. So step 1 of your morning drill is simple: check the king. And by the king, we mean the US dollar index, or DXY, which, we covered super extensively back on day 66.
Yeah, you literally have to ask yourself every single morning, is the king strengthening or weakening? Because if the DXY is just rocketing upward, you instantly know that the risk-off gravity is extremely heavy. Like money is rapidly fleeing to the safety of the dollar. When the king is on a rampage like that, no way do you go out and buy high-risk crypto. You've got to respect the gravity of the market.
Which brings us to step 2 of your morning drill. Read the fear radar, otherwise known as the VIX. Here, you're trying to figure out if the market herd is complacent, which is usually a VIX below 15, or if they're outright panicking, hitting a VIX above 30.
Right, because this single metric perfectly captures the emotional state of the entire market. A professional architect is actively looking for opportunities when that fear radar is flashing super high. But on the flip side, when the VIX is low and everyone's just totally complacent, well, that's when the architect gets highly cautious.
That brings us to Section 3, the compass, consulting our moving averages. Step 3, consult the compass. This means looking directly at your 50-day and 200-day moving averages. And the question you're asking here is brilliantly simple and totally binary. Are we currently above the line or below it? See, this mathematically grounds you in the overarching trend. It takes all that emotional hoping and replaces it with cold, hard structural reality. And this is exactly why Step 3 is so incredibly critical. Think about this. You don't try to build a skyscraper in a hurricane. I mean, really picture that imagery for a second. If the price is crashing way below those key moving averages, you are literally standing in a hurricane. Don't try to fight the storm. Just let the compass guide you to safer building conditions when the trend is actually, at your back. Okay, moving on to Section 4, Tactics, identifying the trenches and reading the thermometer. So now that we've checked out the overarching macro conditions, it's time to zoom in. We're moving to the micro, diving into those rapid-fire tactical indicators. Step 4, identify the trenches. You're checking those support and resistance levels we broke down on day 61. Basically, where is the floor beneath you and where's the ceiling above you?
Exactly. If the price is sitting right underneath a major resistance ceiling, you have one strict mandate: do not buy. Period. You wait for a confirmed breakout, or you wait for a bounce back down to the safety of the support floor. You just never, ever buy right into a heavy ceiling.
And Step 5, check the thermometer. This is your relative strength index, the RSI. Is the asset overbought or oversold? This makes your next move crystal clear. If the RSI is sitting at like 85, man, it is scorching hot. The asset is totally overbought, so you just wait. But if that thermometer reads 25, well, it's freezing cold and completely oversold. That's when you prepare to strike. All right, final section. Section 5, the architect's daily discipline. Let's synthesize all these steps. Look, all these incredibly powerful tools, they're utterly useless if you don't synthesize them into a real disciplined daily routine. So here is a rapid-fire review of those core metrics. The DXY is the king. We use it to check the risk-off gravity. The VIX is our fear radar. We use it to read the herd's emotion. The 50 and 200-day moving averages act as our compass. They read the big-picture macro weather. Support and resistance are our trenches. That's how we find the floor and the ceiling. And finally, the RSI is our thermometer, checking if the market is overbought or oversold. So here it is, your cohesive, definitive 5-step checklist. Honestly, take a screenshot of this right now, or even better, just write these 5 steps down by hand in your daily journal. Tomorrow morning, before you do anything else, before you check social media, before you let all that world noise in, go through these exact 5 steps. Executing this structured drill takes less than 10 minutes every single morning. That's it, just 10 minutes. But I promise you, those 10 minutes will save you 10 years of really costly emotional mistakes in the markets. 10 minutes of discipline literally protects absolutely everything you are trying to build. Which brings us right back to our core thesis for today's explainer, kind of a powerful narrative bookend to everything we've just laid out. Amateurs react to news,
but professionals execute a plan.
You have the plan now. You've got the blueprint. The days of reacting blindly to the chaos of the market, those are officially over. Tomorrow morning, when you wake up, you face a serious choice. Will you open your app and just react to the noise like everyone else? Or will you consciously choose to be a professional, sit down and actually execute the architect's plan? The tools are entirely in your hands, but the choice is yours. Keep building, and we'll see you in the next explainer.